folks, I'm L.A. Little, and this is your daily TA wrap. But we take a look at these markets from a neoclassical perspective and ask ourselves, what happened today? What does it tell us about tomorrow? I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of what is a beautiful Rocky Mountains. Thanks for joining me. We had another day of interesting activity. Actually, today's activity is all about rotation. The markets, we were talking about it last night, the markets simply do not want to give up this move. They've been correcting in terms of price, not time. In terms of price. Let's do it again. In terms of time, not price. And as a result of that, what we've been seeing is a continuation of this hang that we've been seeing for quite a while now. That continuation continues today. It was the listed issues today. It was the big cap issues today. It was safety today. All the money was rotating in those directions. We've seen a little bit of that rotation taking place already. We saw it about a week ago with the XLP. We saw a lot more of that again today, and we especially saw it in large caps, which were in the Dow Jones Industrials. So if we look at those numbers, we had the Dow up 128 points, new all-time high, 15,747. The S&P's tacked on 7.5. They're almost at the highs again, 1770.5. Composite lost 8, 39.31, 39.32 roughly. The NDX down 3.5 at 3385 and a third. The Russell was the leader on the downside, down 5. So you're seeing money come out of the small caps and go into the large caps. Money coming out of the quote-unquote more risky small caps and going into what is more safe large cap, high dividend yield, that type of stock. This to me looks like money managers not wanting to leave the market, because if they leave the market they may underperform. So what they're doing is simply rotating out of things that they've ridden up. They're rotating out of those as we come in towards the end of the year here to be more safe. I mean, that's just what this looks like to me. So if we go back to the charts here and look at the S&Ps, S&P's pushing up. It's going after this high. It looks to me like it's going to try to attack it tomorrow. You remember tomorrow is the ECB decision. That's kind of the cream of the pudding tomorrow is what they say or what they don't say. The expectation that has been built into the market to some extent, not completely, but certainly some, is that they are going to lower the rates again. They're not going to do any QE that I can tell, but a lowering of the rates, half a point potentially, maybe even a full point, to juice their markets one more time, which is what we've seen. It seems like to me, and it would be interesting if 10 years from now you're able to piece all this together and you see that it was concerted, coordinated central bank intervention, one country after another, forcing these markets higher and higher and higher, because it certainly feels like it, right? First you get us, then you get then you have Great Britain doing it. Actually, Great Britain was doing it first, and then us, and then you saw it in the ECB with some of their LTROs that they did. Then you came back. It was us on another QE. We're on QE3 at this point. You have the Bank of Japan coming in big the beginning of this year. And just look at the spacings, right? You had the Fed in August. You had the Bank of Japan at the beginning of the year. Now you're talking about the ECB lowering rates again. It's just like a concerted effort between these central banks to keep pushing folks into risk. That's what they keep doing. That's what they keep trying to do. And that's why you see these markets where they are. So S&P's towards the top. It looks to me like they're going to try to attack it. If we go to look at the Dow, remember now the Dow has been, at least pull this over to a weekly, the Dow has been in this range This is almost 7 months now. It's 6 months. 6 months in the range. If you take this as the beginning of the range, that's April, and we're in November. So you basically have 7 months range trading, and you're starting to break out. Now it's got to pull away if in fact this is going to be real. But this is the Dow making new highs, all-time highs. And though, it was another one of those suspect breakouts, and we'll see that tomorrow, volume's not there. It is a breakout, and if they can start pushing away now, all these indexes have set up ABCD structures. And the Dow's ABCD structure starts here. That's 15161 going to there, which is what is it, about 560. Tack that onto here, get you up to 16,200, and we're trading tonight at 15,007 and a half. So you can see another 450 points potentially if in fact this starts to leg away and break higher. And as we're coming into the end of the year, that's the expectation. Everybody's been waiting on it. Nobody wants to sell. As we talked about, I think it was a couple days ago, we had this ledge on the NDX. Now that ledge is still there, and the NDX still hasn't been able to get out of this range that it's been in for on the order of 3 weeks now. That ledge, every time we came back down there, we came 3 times now, each one of them, the sellers just walk away. They're not going to sell anymore at lower and lower prices. And that kind of behavior is what's causing this thing to trade sideways and to slowly eat up time after the latest big move up. And you're in a bull market when you have that kind of condition and it goes long enough. You have to start siding with the side that has the trend in their favor, and that's the bullish trend right now. And as we saw it in the Dow today, you actually got the breakout. The NDX, the Nasdaq, the Russell, all of them can't get going. Russell didn't go anywhere today. We had negative action in those 3 on the OTCs. But again, it seems to me like when I look at this as a larger picture, you're not getting a bunch of new money in, you're simply rotating that money. And I expect some of that money was freed up today to buy Twitter tomorrow because it goes public. It looks like it's going to go in at 28. They started that at 17, a week and a half ago. So you go from 17 to 28. That's $11 on 17. That's about a 60%, 65% premium that they built into this thing as they come to market. It's going to value the company somewhere around $12 billion, I believe. So it's not going to be cheap when it comes out. To me, it looks like the Facebook offering in that it's going to be at a price point you probably just don't want to even buy it unless you're flipping it. All right, let's go, and I'm actually going to go to the overseas markets. And the reason I'm going here is because the ECB, with their rate cut, if they do it tomorrow, we're going to see the behavior felt in Europe. Europe's been doing the same thing. I'm looking at the CACs. This is the French CACs. It's about 2.5 weeks up here at this range. You can see again when they do push down, they're pushing with volume, but they can't get back into this lower range. That high was 42.28. They traded into 42.32, so they haven't been able to get back inside there and test that high again. So really the support is towards the bottom of that. But right now they're hanging up there. This one doesn't look as positive as our market in that you're seeing some volume expansion as you come down. I see the only 2 larger bars here are down bars at the bottom of that ledge. But it's still hanging. And I'm assuming the ECB thinks they can make it jump again if they lower rates. So we'll see if that's what happens. If I look at the FTSE is more heavily than the others into commodities, which has been a difficult thing for it. If I pull it over, and let's just do these on weeklies as well. If I pull it over, you can see it hasn't gotten back to that high yet, but it's hanging up here now, a week and a half at the highs. The DAX is the strongest. The DAX just keeps crawling higher. You know, I was looking at some numbers today on the DJIA investors, investors daily. It's not investors daily. What is that? I can't remember the name of it. Anyways, the DJIA, and it's the numbers of bulls to bears, and the numbers are pretty much off the chart. You've got bulls coming in at like something like 55%, which is like way on the other side of where the sentiment should be. You've got bears now at like 15%, and if you look at what is it, the VXX, which is the options, you can see here, I'm pulling this up, you can see this thing is hovering down here at lows. We're not even, that's 17 where these spikes were. We're down at 13, 12, 12 and a half, almost 12 now. I don't even think we've seen a number this low. Let me go back to like a monthly on this. Yeah, I mean, look at this. So from some ridiculous number all the way down to 12. What is that, 1,000 up there? Good Lord, almost 2,000. Now that's a decline, huh? On the monthly. But anyway, the point is that if ever there was a situation where everybody is on one side of the boat, we're pretty much on one side of the boat here. Sentiment, the way the markets are trading, markets all around the world, and so forth. So it's kind of hard to get overly bullish at this point, but as has been the case for so long, you can't be bearish. They simply won't let you be bearish, because if you are, you're doing one of two things. You're either shorting this market and losing money, or you're doing nothing and watching all the opportunity go right by. You're not participating. Let's work our way back over to Asia. Here's Australia. Now this one's actually interesting, because you can see they've had a heck of a run. This looks just like our market. A heck of a run, new highs. You got the retest, you regenerated higher, you've made new highs on the weekly, you're up here hanging on the dailies. And this is all happening as some of the risk is coming off. That's not the one I want. I want to go to Hong Kong. Here we go, Hong Kong. The risk is coming off markets like the Chinese and Hong Kong market. You can see these are not doing nearly as well. You got a range trade up here, never broke out. That's true on the weekly and the daily. Yet Australia, who supplies them, is seeing all-time highs. Let's look at Toronto, which is also a big materials, and that's at all-time highs. Looks just the same. And Brazil, let's see about Brazil. Although Brazil has other issues. Let's see what Brazil looks like. Yeah, Brazil looks more like Hong Kong. They couldn't get back over the highs. They got up and tested that high, failed. They actually hit it with volume here. That's 56747. Yeah, it's interesting, because on the weekly they hit with volume into resistance. They weren't able to crack it. They're pulling back now. This is not a bad looking chart, actually, for a range trade potential breakout on the weekly. But you would think that with China struggling, you wouldn't see quite the enthusiasm in the material producing countries. Let's pop over to some of the others that are there. Let's go to Taiwan, chip country. See what these guys look like. I believe they have been pulling back a bit. Yeah, they went up, they tested the highs. Remember where they were trying to test, they didn't have the volume. So they got up there, they tested, they got over it. They're doing a retest regen. That could take them back up to 8172, which is basically the bottom of the zone. I believe this bar is going to give them the support, and I almost got into it last night, 8231. Yeah, so they've just about done on their correction. I expect that they will flip around and try to go back the other way. Japan did go the other way last night. Japan also consolidating, wanting to go higher. You can see here on the weekly. Remember, they got the high volume high out there. You're going to go test it at some point. That's at almost 16,000. You know, if I were doing the classical TA stuff, you would draw that channel in here, and you can see it tightening. And you know, they say that it will break one way or the other, and typically in the direction of the trend, which would be up. Although this one, the apex, it's almost out in the apex of the triangle, so I don't think it has much meaning at that point. At this point, so this is just range trading still. Let's see, where was the other one I wanted to go to? Yeah, I don't see it now. Oh, here it is, Korea. Let's see what Korea's doing. These are all big export countries. So Korea tests the top. Doesn't have the volume. It's doing its retest regen also, and it's just about done. And probably going to flip around. So I think you're going to probably see Asia try to trade higher tonight. All right, let's pop over to our sectors and see if there's anything on them that's worth noting. Okay, we'll start with the transports. Okay, so the transports come off with a little bit of volume, huh? Nothing big, but a little bit of volume. These guys have been on an unbelievable run again. I mean, you can see it. Remember the beginning of the year when they did that November? It went from November to April without even a pullback. You had 2 weeks pullback in a 6-month span. That's a pretty big run. Basically consolidated sideways to up, and now you're breaking higher again. And you're not going to have a 2-bar reversal. Volume's too big. This just looks like it wants to come back some. XLB. So materials have been hurt because the dollar's been strong, but they wouldn't even break down. They just came in, continued the retest regen, no volume, doji back up, just hanging. I think the semiconductors look about the same, although remember the semis had a larger day down back here on the 23rd. But still hanging at the top. XLE, I saw Chevron with a big bounce. Chevron had reported earnings, sold off quite a bit, got a big bounce today, and ExxonMobil continues, but this thing couldn't go anywhere today, just sit there. That's still consolidating, and the volume tells there are for it to try to come back. XLF has been the weakest sector lately, which has been part of the reason why the Dow has struggled. They got a little pop today, but really nothing. I mean, it's just, again, nothing there. It's just hanging. XLI and IYT had been the strongest. Let's see what this one did. IYT came off a little bit today, and not this one. This one's still going up. So the industrials continue to try to climb this wall. I mean, that's 2 days down in what? About 17, it looks like, maybe 18 days, even more than that. 2, 3, 4, 5, 6, 7, 8, 9, 10, 20, almost 20 days. 2 days down in 20. That's pretty extended. XLK, one of the big moves today was in Microsoft, so XLK was up pretty big. Probably new highs, I would think. Yeah, brand new highs, gets over the highs, can go higher. And Microsoft was running on news of the search for a replacement candidate for Ballmer. That's the CEO. People bidding it up. XLP. Now here's where the rotation was taking place. Remember about 7-8 days ago we had a big pop up on the XLP right here. It was about 7 days back. So it broke out. That's interesting. So it was breaking out over a swing point high that's not on the chart anymore, and it was suspect even with that kind of volume escalation. Comes back and goes back over and makes new highs today. It doesn't have the volume, but it makes new highs and holds. Can go higher. rotation. That's plain and simple. That's what's happening here. Rotation here, rotation starting to happen finally in the utilities. We're seeing money slowly gravitate back to these guys to get those dividend yields and the safety. The healthcare sector wasn't quite as benefited, didn't benefit as much, even though it's kind of quote unquote a safety sector, a little bit of pullback, still hanging at the highs. And the last one is the discretionary. Let's see what that one looks like. And I believe the money has already front run this one, so I doubt it's going to make a huge move into the Christmas season. They always front run these, so that one just comes back today. No, again, nothing big, so you pull back a little bit. Let's see what the aux sectors, if there's anything there that's useful. I believe we didn't see anything anywhere other than the Dow making new highs and the rotation theme really kicking in today. We'll start with the dollar because this is going to be the big story tomorrow. Either the dollar is going to spike or get crushed again, one of the two. And let's see if there's any tells here as to what it wants to do. $21.81. So the retest regen is off this bar. That bar's got 6.6 on it on the weekly. Last week we did 7.4, so we're coming into it with nice volume. This week we've done 2. This is Wednesday. 2 is it's about 7's 1.4 plus 2's 3.4. You're not going to have the volume unless volume really comes into this. And right now, it looks like it's going to regenerate lower on the weekly. You also tested into the highs and failed on price, failed on volume. The test was yesterday, 21.77 into that high. That high had 706 on it. You tested a 4. Well, looking at the UUP, it looks like the euro isn't. It looks like the ECB isn't going to cut their rates. And looking at the money coming back into the euro today, that also looks to be the same over here today. Although the jury's out on this one. As you came into resistance here, you're coming into the, you broke down big bars here and got underneath them, and now you're coming right back up into them. Let's see on the weekly. So on the weekly, the test on the regen was 2.9. That low was 133.31. So you tested under it, you're doing 1.4, 1.5. That one actually has about the same volume on a weekly. So it's a toss-up. Depends on where it falls. Like everything else, it's too close to call, right? We saw a big pop in oil today. Back the other way, we had we had sold this thing off, ABCD structure down, almost finished it to the penny, flipped around. Now you're coming back the other way. It gets back up into resistance. I doubt it goes much farther than that, and then probably more pressure on it. Gold and silver, a little bounce in gold. Gold's up $10 today, but again, these all depend on what happens tomorrow. This still looks like it's going to trade lower to me. Let's see if silver looks any different. It looks like it's still going to come back into that big bar that we've been watching. Silver, what do we got here? Yeah, my chart's taking a nap here. Here we go. Silver. Well, maybe not. Okay, well anyway, as it draws here, I'm expecting it probably doesn't show us anything. I did look at the municipal bonds, junk bonds. They bounced a little bit. And really nothing else. The commodities in general keep selling off. I mean, if you look at the RJA, the DVA, they keep selling off. I had a member asking yesterday about another one. I forget what that one was, but it was the same story. Here's silver finally. Yeah, this didn't do anything. This looks to is failing into resistance here. 2105. Yeah. This is going to come down deeper. If that's true, that suggests the euro is going to sell down, which would suggest the opposite, and that is that the ECB is going to loosen its strings. We also have the GDP tomorrow. That one will probably be a fairly big number, but I think the ECB overrides everything. Whatever happens, by the time we open in the morning, it's already going to have happened. And then by then, Draghi's going to be, flapping his jaws and talking to us about how they're going to save the world. And the markets have already made whatever move they're going to make. And, we're going to open up, down, or up. It doesn't matter. It's one or the other. This market, to wrap this up, this market is overbought, has been overbought. The fact that it's gone sideways now for upwards of 2 to 3 weeks, depending on what you're looking at, provides the opportunity for it to make another spurt, even though it's overbought, right? Even though there's too many people on one side of the boat, right now, you've gone sideways long enough that you can get another move. You also have the situation which you probably saw in the Dow to some extent today, and that is that there are stops up above. If you start taking those stops out with a market that has gone up pretty much all year, it's going to be very hard to find anybody that wants to short this thing, and it's going to be extremely hard to find anybody that has something that wants to sell it. Which means what? Which means this thing just kind of self-fulfilling pulls itself higher. That's not a good thing long term, but this is day to day. The market lives day to day. It breathes minute to minute. It makes its move. It does its test. It does that on a regular basis all day long, every day. It doesn't care about next year. Next year will be wherever it is, depending on what happens in all the days leading up to it. Which is why I usually say, you don't need to figure out where it's going 6 months from now. If you just figure out where it's going over the next 2 or 3 days or the next week, you can be on the right side of the market 6 months from now without knowing what it was going to be. So, folks, I'm going to leave it at that. Tomorrow's a big day. We'll see what the ECB does. That's really going to define both tomorrow and probably even define Friday. I doubt the employment numbers are going to change things very much. Looks to me like this market's going to try to break higher. We'll see if it does it. Have yourself a great night. Appreciate you being there. Take care of yourself, and I see you next time. Good night, folks.